Thank you so much for joining me here. I'm Don Ma. To start off, a couple of China-related stories. The Beijing Stock Exchange has de facto implemented a new policy that prevents major shareholders of companies listed on the exchange from selling stock because there's worries that sales could put out a long-desired rally. This is according to 3 people familiar with the matter. Let's take a closer look.
The Beijing Stock Exchange has reportedly barred major shareholders from selling stocks listed there. 3 sources told Reuters about the de facto new policy, which they say is meant to stop a recent rally fizzling out. Chinese regulations define a major shareholder as one with a stake of 5% or more. Rules say they're required to make a public filing with the relevant stock exchange before selling shares. But sources told Reuters the Beijing exchange has been rejecting such filings. They added it wasn't clear how long this new policy would remain in place. The Beijing Exchange and the China Securities Regulatory Commission did not immediately reply to requests for comment. The bourse was launched 2 years ago, aiming to drive funding for innovative small companies nicknamed Little Giants, but investors had largely shown a lack of interest until this month. The market's benchmark 50 index surged 46% in November due to recent measures by authorities intended to make it easier to invest there. The Beijing bourse currently houses 232 listed companies with a combined market capitalization of some $50 billion. That's a small fraction of the value of firms listed on the Shanghai Stock Exchange.
China's car-sharing company Didi Global on Wednesday offered millions of its customers coupons as part of an apology for a glitch that hit its ride-hailing app this week. Here's more.
Ride-hailing giant Didi Global offered millions of customers discount coupons on Wednesday. The Chinese firm made the offer to apologize for a glitch on its app this week. On Monday, Didi's app had a system malfunction and issues continued through Tuesday. It left users in many cities unable to book rides. The coupons offered a discount of $1.40 for all users, and Didi also said it would refund passengers the difference if they overpaid. The company didn't immediately respond to a request for comment on how many users will be eligible for the coupon. Didi has 587 million users worldwide, most of them in China. According to its latest results, Didi's China service recorded 31.3 million daily transactions during the third quarter. It blamed this week's disruption on an underlying system software failure and not a cyber attack. It also said its services were fully restored. The company's discount gained mixed reactions on Chinese social media. Some users said they were having issues claiming the coupon, while others criticised the coupon's use-by date of December 2nd.
And China-founded fashion company Shiin has confidentially filed to go public in the United States, according to 2 sources familiar with the matter who told Reuters on Monday. Take a look.
Fast fashion giant Shein plans to sell its shares in the US. That's according to 2 Reuters sources, who say the firm founded in China has confidentially filed for the listing. They say it's hired banks including Goldman Sachs to handle the IPO and begun low-profile marketing to investors. But analysts say the move faces numerous challenges, including a lackluster market for new share listings. Recent months have seen 4 major IPOs in the US, with 3 disappointing investors. German sandal maker Birkenstock, food delivery app Instacart, and chip designer ARM Holdings all dropped below their IPO prices in early days of trade. Shein also faces tighter scrutiny from lawmakers. In August, attorneys general from 16 states asked regulators to check whether the firm used forced labour. Its strategy of posting its low-cost clothes from China direct to consumers is also controversial. The tactic allows it to avoid import taxes, as they aren't levied on very cheap items. But critics in Congress have called for that loophole to be closed. There was no comment on the IPO reports from Shein, which is now based in Singapore. It was valued at over $60 billion in May and has been growing fast by taking market share from rivals like Gap. Any US IPO would be the biggest by a China-founded firm since ride-hailing app Didi Global debuted 2 years ago at a $68 billion valuation.
And U.S. stocks ended with modest gains on Tuesday as investors parsed conflicting remarks from Federal Reserve officials, with upbeat consumer data providing some lift. Here's a quick recap of markets.
U.S. stocks finished slightly higher Tuesday after trading in a narrow range as investors parsed conflicting remarks from Federal Reserve officials, with upbeat consumer data providing some lift. The Dow added 0.25%, the S&P 500 rose 0.1%, and the Nasdaq climbed 0.3%. Fed Governor Christopher Waller said on Tuesday he is increasingly confident that the current level of the central bank's policy rate is sufficiently restrictive, and even hinted at the possibility of rate cuts in the months ahead. And Chicago Fed President Austin Goolsbee touted progress in bringing inflation down. But Fed Governor Michelle Bowman suggested another rate hike could be necessary to rein in inflation in a timely manner. Market Vector Index's head of product management, Joy Yang, said she doesn't think the Fed will reduce interest rates anytime soon.
My take is, given the resilience in what we've seen in some of these numbers, specifically the labor market, consumer spending, the economy itself, it seems like, we're not at the end of inflation, until we see the labor market come down significantly. I think we're still higher for longer.
Data out Tuesday showed consumer confidence surprised to the upside, while the National Retail Federation said consumers plan to spend about 5% more during the holiday season this year. Stocks on the move included Boeing, which climbed more than 1% after RBC Capital Markets upgraded shares from sector perform to outperform. Also, Micron Technology, which dropped nearly 2% after the chipmaker said it expects higher first-quarter operating expenses than previously forecast.
And from the U.S. dollar to China's faltering economy, these are some of the stories to watch out for in the business and finance world. Here's a quick look.
From the U.S. dollar's drop to China's faltering economy, these are the stories to watch in business and finance. The dollar is heading for its weakest monthly performance for a year. The prospect of a rapid flip to rate cuts by the Fed next year has driven investors into beaten-down treasuries, pushing yields down and boosting stocks at the expense of the dollar. Seasonally, December is the worst month for the dollar, but it tends to recover in January. The Personal Consumption Expenditures Price Index due on Thursday is expected to show no change in October from the prior month, according to a Reuters poll. A Consumer Confidence Index report is due on Tuesday. The October reading showed a third straight monthly decline. COP28 gets underway in Dubai on Friday, with no consensus likely and pessimism around the key 1.5-degree warming target. The best that can be hoped for might be more money and focus from the big multilateral institutions like the World Bank, and deals on uncontroversial areas like tripling global renewable energy capacity. China's top economic advisor plans to recommend a 5% growth target for a second year, Reuters reported exclusively on November 22nd. They say more fiscal stimulus is needed to get there, but support measures have fallen short so far. China releases official manufacturing PMI data on Thursday, which last month showed an unexpected contraction, killing momentum for an economic recovery.
And economic growth in the U.S. was even stronger in the third quarter than previously estimated. That fact underscores the economy's remarkable resilience in the face of elevated inflation and high borrowing costs earlier this year. Gross domestic product, or GDP, the broadest measure of economic output, rose at an annualized rate of 5.2%. from July through September. This is according to the Commerce Department's new estimate released Wednesday morning. GDP is adjusted for inflation and seasonal swings. Today's latest data reflects an even faster pace of growth than the rate the department initially estimated of just below 5%. After a robust third quarter, the U.S. economy is widely expected to grow at a much slower rate in the fourth quarter or the final months of the year as pandemic savings dwindle. And home prices in the U.S. continue to increase in September, and this is marking the 8th consecutive month on the rise, according to data released Tuesday. Mortgage rates remained above 7% in September, but historically low inventory continued to raise home prices. In fact, they remain at an all-time high in Atlanta, Boston, Charlotte, Chicago, Detroit, and several other cities. Home prices grew nearly 7% in September alone in Detroit, San Diego, and New York. Charlie Munger, the longtime vice chair and second in command to Warren Buffett at Berkshire Hathaway, died on Tuesday morning at a California hospital. Here are the details.
Warren Buffett has lost his right-hand man. Longtime business partner Charlie Munger died Tuesday, aged 99. Representatives said he passed away peacefully in a hospital in his home state of California. His passing leaves a void at the heart of Berkshire Hathaway, the investment titan that he and Buffett ran for decades. Munger had been vice chairman of Berkshire since 1978. He worked closely with Buffett on allocating the firm's capital and was known for never mincing his words. Investors flocked to the firm's annual meetings in Omaha, Nebraska to hear the pair offer their folksy wisdom. One longtime observer said Berkshire would just be less fun with Munger gone. Though he had no longer been involved in routine operations, analysts say he was a vital sounding board for the boss. It's thought Buffett won't try to replace him, with day-to-day tasks going to two other vice chairmen. The Berkshire boss himself is 93. Writing last week, Buffett said he felt good, but knew he was playing in extra innings. His son Howard is expected to become non-executive chairman when he does finally step down. Berkshire owns numerous businesses and has hundreds of billions in stocks, including a big stake in Apple.
North Korean leader Kim Jong-un received photos of the White House and Pentagon taken by its recently launched spy satellite, state media KCNA said on Tuesday. And this is coming a day after tense exchanges between Washington and Pyongyang during a UN Security Council meeting over the launch. Here's the report.
North Korean state media said Tuesday its leader Kim Jong-un received photos of, quote, major target regions in the United States, taken by its recently launched spy satellite. KCNA said the batch includes photos of the White House, Pentagon, and U.S. aircraft carriers. Seoul officials say the North's claims could not be confirmed as it has not released the photos. Contention over the satellite spilled over into a snap meeting of the UN Security Council a day earlier, which was called to convene after last week's launch, following dozens of ballistic missile tests over the past 20 months. It resulted in a rare, direct, public exchange between the U.S. and North Korea. Here's U.S. Ambassador Linda Thompson-Greenfield.
The DPRK is unabashedly trying to advance its nuclear weapons delivery systems by testing ballistic missile technology in clear violation of this Council's resolutions.
In unplanned remarks at the end of the meeting, Thompson-Greenfield rejected Pyongyang's claims that its launches were defensive actions in response to military provocation by the U.S. and its allies, but extended an offer for dialogue, quote, without preconditions.
The United States is just threatening us with a nuclear weapon.
In response, North Korea's Ambassador Kim Song defended what he called his country's, quote, legitimate right to develop its weapons systems on par with the U.S. North Korea has been under UN sanctions for its ballistic missile and nuclear programs for nearly 2 decades. But for the past several years, the UN Security Council has been divided on how to deal with Pyongyang, with veto powers Russia and China arguing against further sanctions. Washington says such protection from Moscow and Beijing only emboldens North Korea to continue to flout UN resolutions.
And a big boost for organizations that rely on the spirit of the season to drive end-of-year donations. Now, a number of charities will encourage online donations, and scammers are ready to take advantage of that. Here's what to know this holiday season.
Amid the bustle of holiday shopping and spending, it's also a good time of year to give back. Unfortunately, scammers will deploy common tricks to take advantage of the busy season.
There are so many things that we interact with online and things that we do online, and that goes for both work and personal life. that, there are a lot of ways to get people to act.
Hank Schless of cybersecurity company Lookout says phishing scams, emails or text messages encouraging a recipient to follow a link to a fake website that looks like the real deal can prompt a consumer to give away critical information like logins and passwords.
Once they steal that, they'll go and they have these programs that can automatically try your credentials across thousands of other websites, including banking websites and things like that.
As Americans make end-of-year online donations to support causes and groups, the Federal Trade Commission warns scammers often put pressure on consumers to donate right away, often using the name of a group that seems legitimate to cause confusion. Before giving, seek out websites that evaluate charities like the Better Business Bureau's Give.org, or check a charity's standing with the IRS. And use a credit card or check for donations. The FTC says asking for cash or gift cards can be signs of a scam.
Meanwhile, analysts say U.S. consumers figuratively broke the bank over the Thanksgiving holiday weekend, including billions of dollars of online sales. And that trend is expected to continue over the next few weeks, and it's going to give the overall economy a boost heading into the new year. Here's more.
Black Friday, Small Business Saturday, and Cyber Monday are in the books, but the holiday shopping season is far from over.
We wanted to get some games to play with the kiddos. We got a couple kids at the house, so, keep them occupied.
Despite 3 years of high inflation, the occasional threat of an economic shutdown in Washington, D.C., and increased lending costs, U.S. consumers are still opening their wallets in the post-pandemic era.
We're now at the stage in the economy where those cost pressures have abated as supply chains have really normalized across most products.
Retailers are hoping deals on products will boost sales. According to Adobe Analytics, items like toys, electronics, sporting goods, apparel, and appliances will all have double-digit discounts this holiday season.
The Black Friday period that we just experienced was one where the consumer was out and about and spending, certainly still very focused on those promotions.
Adobe Analytics says U.S. shoppers will spend a record-setting $113 billion in e-commerce this November and December, a nearly 14% hike from the year before. Social media is also playing a factor.
The toy space as well has a lot of influencers, parenting influencers, showing off what they're getting their kids and really influencing what those top toys of the year that are likely going to sell out.
And that's all the stories we have today. Thank you very much for watching NTD Business.